Good evening, friends. Further to our introductory video to SIF launch, I just wanted to give you some more insights on SIF, which is being launched by some of the mutual funds. As I told you earlier, SIF will be launched in 3 different categories: in equities, in hybrid category, as well as in debt. In equities, they will come with 3 different variants, which is equity long short fund and equity EX top 100 long short fund and sector rotation long short fund. To understand this in better, equity long short is basically, as you always know in mutual funds, as you stay long, you will gain return. Whereas in this SIF, since they are using the arbitrage strategy, you can take a naked sell position, short position. That means that if the fund manager feels that the stock can go down in the short term and he can, without owning the stock, he can sell it now. Later, he can buy back. So the difference between the sale price and the buy price will be the profit. So this strategy is not available in mutual funds. This is exclusively available in AIF, which comes with a much higher ticket size, and SIF takes this advantage. So the experienced fund manager within the regulatory ambit will take exposure up to 25% whenever there is a market opportunity, so that even if the market goes down, the fund manager can generate alpha along with the long position, so that he can take advantage of both the markets, that is the equity long short and the X top 100 is basically they will invest across the broader market, including mid, small, and even micro cap. The top 100 companies of the universe, top 100 stocks of the NSE, BSE will not be touched. Beyond that, they can take a long exposure across the market spectrum, and they can also short there up to 20%. Which is allowed in the regulatory framework. And the in the equity category, the third option is the sector rotation long short fund. In sector rotation, they can take exposure up to 4 major sectors, where they can bet high on that and take exposure in such a way which can deliver much higher return than the normal indexes. So they are taking a very tactical allocation by going high sector weightage up to 4 sectors which they can take. Here also the naked short position is available up to 20%. So these are all the broad frameworks which are available in the equity part of the SIF. And next comes the hybrid part of the SIF. Hybrid part is even more interesting. It comes with lot of options. They can invest across equity, debt, commodities like gold and silver, REITs, InvITs, where the investment limit is increased, international equities as a tactical allocation. Here, the biggest advantage is that they can take all the derivative strategies, something like covered call, protective put. They can use straddle strategy, and they can create positions, and they can reduce risk and generate return. So these type of options are not available in the hybrid mutual fund space, and this can give them a very good absolute return experience to the investor. And all the changes done by the fund manager, the taxation is not being levied to the investor, because it comes under the mutual fund bracket. So the taxation will not have any major impact on the investor. It is done within the fund level. As long as the investor stayed invested, they will get the benefit. And here, in order to get the tax advantage, if the investor stays for more than 2 years, they will also qualify for the 12.5% tax in the hybrid category. And there, this asset allocator long short fund will also be part of the thing. And a hybrid long short fund. Both will use multiple assets and multiple strategy to generate good investment experience with lower risk. So they can take opportunistic calls across different market segments based on the market opportunities. On the hybrid side, the third is on the debt side. In debt side also, they will have investment strategies with long short fund, debt long short fund. Basically, what they will do is they will find opportunities in select PSUs, select NBFCs, or even some companies which are expected to have a high credit rating or expected to get reevaluated with a higher rating, so that in the credit opportunity space, they will take exposure in that, and they will also dynamically manage the uh, duration part of it in order to generate the alpha in the debt long short strategies. And as far as the debt SIF is concerned, the debt taxation will be the same. It will be taxed as per the income slab, irrespective of the holding period. So this is about the broad understanding about the SIF, which is being launched by some of the fund houses, something like SBI has launched, Quant has launched, Edelweiss has gone. All this launch has been done with a new identity, because they cannot use the same identity of the mutual fund. It will have a separate identity. For example, in Edelweiss, it is called as Altiva. In SBI, it will be called as Magnum. So like that, so that it will give a differentiated experience, and clients who have decent portfolio and got 10 lakhs of investments and who wants to experience differentiated portfolio strategy should definitely try this investment, because it does not have a track record, but since it will be managed by a very efficient fund manager with a robust team, I'm sure that investor will have a good investment experience. Fine. And the good news is that investors who are already accredited investor, they can come with a ticket size of just 1 lakh instead of the mandatory 10 lakh. And even once the investor has invested in 10 lakh in a scheme, if there is another strategy being launched by the same brand, then they don't have to invest another 10 lakhs. It can be as small as 10,000 rupees also. They can switch between the strategy also. Of course, keeping taxation in mind, we will do it if necessary only. And it gives them a wide range of investment options to consider. The one major difference here to note is that in mutual funds, the subscription is available allowed daily. In SIF also, the subscription is allowed daily, but redemptions will be done only 2 times in a week, where the dates will be determined by each brand. Some of them will have Monday and Wednesday, some of them will have Monday and Friday, like that. So that the redemption can be done only on those specific day, and it will be as equal to a mutual fund. Transaction plus 2 days will be the TAT which the client is expected to receive the bank the proceeds of their fund. But ideally, this investment strategies in hybrid should consider with a 3-year view. For a equity strategy, it is good to consider with a 5-year view. For debt, depending on the tactical allocations available in the market, they can consider. So in order to understand how this will add value in your portfolio, do get in touch with us. We are more than happy to assist you on this exciting new product, which will become a game changer in the India's financial industry, which is very much regulated by SEBI. Thank you.